Micron stock is up over 198% year to date in 2025. And of course, I'm thrilled about that because I've had Micron stock rated as a buy all year long here in 2025. So I'm happy that the stock is performing as well as it is. Of course, I've had many investors ask me if I still think Micron is a buy and what do I think about the company at these new higher valuations. I'll answer that question in this video. I'll also share with you a big update to my discounted cash flow valuation for Micron based on changes in free cash flow expectations for this company in future years. So we'll do all that in this relatively short video. So let's get started.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So one of the reasons why Micron stock is booming is because the company is benefiting from the rising effectiveness of artificial intelligence. Micron manufactures and sells components that go into electronic devices, including for smartphones and computers. Micron also partners with NVIDIA and sells components that go into the data centers optimized for artificial intelligence. All of those categories are increasing and benefiting Micron. In electronic devices, in consumer electronics, the devices are being embedded with greater component technology, greater component capability, and higher average selling prices. So even though there isn't that much more in terms of unit sales of computers or unit sales of smartphones, the premiumization in those categories is fueling growth for Micron. So people in their previous cycle of purchasing a laptop or purchasing a desktop may have opted for less technology, lower priced units, and now they're upgrading to the higher priced unit with more technology because they want the benefits, the features that are added with artificial intelligence. Similar with smartphones, even though the total number of smartphones, the total number of unit sales of smartphones is not increasing by all that much, the average selling price of each smartphone is increasing. And we're seeing that across the board, whether you look at the results from Micron or Qualcomm or Apple or others in the industry, they're all indicating similar trends where consumers are opting for the higher priced model. And that's fueling growth for Micron in those categories. And of course, the data center segment optimized for artificial intelligence is booming, and Micron's high bandwidth memory product is fitting well and generating great interest from component purchasers and OEM producers. So all of which has boosted Micron's revenue from $15.5 billion in 2023, more than doubling to $37.4 billion in the most recent trailing 12-month period. Now, to fuel further growth, Micron has invested in improving the technology of its manufacturing facilities and expanding its manufacturing facilities. So, increasing the technology and increasing the capacity. Again, fueling growth for the company because demand is increasing significantly, both for memory and for storage. Micron is forecasting double-digit growth for the next 5 years. So demand for the products are excellent. And then, of course, one of the other benefits Micron is seeing right now is being a U.S. semiconductor manufacturing company at a time when the United States administration is very focused on bringing manufacturing back to the United States, is getting the benefit from that political sentiment from investors and the administration, all of which is working well for Micron. And these are some of the reasons why the stock price is soaring. Now, the growth in revenue has also led to a significant increase in the company's cash flow from operations to sales, jumping from a low of 10% in 2023 all the way up to 47% in 2025. Now, if you're a prudent investor, you should be asking, why did the operating cash flow to sales ratio collapse all the way to 10% in 2023? Well, the primary reason for that was the company is investing aggressively in building out the manufacturing, as I mentioned, both quality and quantity. But also remember, during the pandemic, 2020, 2021, and for parts of 2022, people bought a lot of consumer electronics, laptops, desktops, smartphones, tablets, etc., all of which Micron benefited from significantly. But when you buy any of those electronic devices I highlighted earlier, those are longer lasting goods, several years, right? The average smartphone user keeps their phone for 2 to 4 years. The average personal computer user keeps their computer for 4 to 6 years. And so if you bought a computer in 2020 or 2021 or 2022, you're definitely not going to buy one in 2023, especially when economies reopened and people were called back to the office. People went back to school in person. So the needs of those devices also decreased. And at the same time, households had a lot more of those devices than they typically would normally have because of the surge in purchases during 2020, 2021, and 2022, when it was no longer enough to have just one computer in your house. You needed one computer for almost every person in your house. So you had all that kind of surge in demand in 2020, 2021, and 2022, and that created a gap in 2023. And that's why you saw Micron's cash flow from operations and revenue and all of these other metrics collapse in 2023. But the good news is that all of those devices that I highlighted that were purchased in those years, I mentioned 2 to 3 years for smartphones, 4 to 6 years for personal computers. Right now, starting in 2025, is when you're entering into that upgrade cycle when those devices that were purchased during the pandemic years need to be replaced and upgraded. And so that's where now Micron is benefiting from that replacement cycle. And as I mentioned earlier, the premiumization of consumer electronics, where people are opting for higher price units with more technology embedded to capitalize on AI. So Micron's valuation, even though the stock price has increased by so much, the valuation is still not very expensive. It's trading at a forward price to earnings of 15 and a forward price to operating cash flow of just 10.6. So the valuation is still attractive on a market multiples basis despite the increase in share price, because the fundamental improvements on revenue and cash flow and profitability, right? It's been supported by increases in those critical metrics. It's not like a Tesla situation where the stock price is just increasing based on hope and enthusiasm for something in the future. The stock price is increasing based on increases in revenue, in profits, and cash flow right now and in the previous 12 months. And so that's what's supporting this increase while keeping the valuation at attractive levels. Furthermore, when I look at valuation using my proprietary discounted cash flow model, it looks fairly valued. It doesn't look cheap. And I updated this model today, and the intrinsic value per share nearly doubled because I haven't updated my Micron intrinsic value per share calculation for a few months now. And the changes in expectations and free cash flow have increased by so much for Micron throughout this year that when I fully updated my model to include those new higher expectations, it nearly doubled the intrinsic value per share up to $242, given the current market price is $251, and I apply a 5 to 10% margin of safety. So at this level, the stock looks fairly valued based on my DCF calculation. Now, you have a stock that looks undervalued based on the market multiples method, and it looks fairly valued based on my discounted cash flow valuation, and the company has several tailwinds working in its favor. So I will reiterate my buy rating for Micron stock today, November 14th, 2025. By the way, did you know about our exciting channel membership program? You get so much for less than $5 a month, including dozens of exclusive videos, access to exclusive research on over 100 stocks, and early access to many of my videos before everyone else sees them. Click that join button below to learn what this program is all about.